Okay, so we're back and we're live. You guys, this is Ed Travato. He is our amazing insurance partner, and we're sorry that we had a little bit of a late start. I know we said 12 o'clock, but Ed just wanted to come over and see us, so that's all right. We love seeing Ed. We love seeing everybody. So we're just going to wait a little bit and see if we can get a few more people to join us. Don't be shy, Ed. Come on in. Michael, I think, is going to join us in a second, too, or I don't know where he'll stand back here, but basically today we're going to be talking about homeowners insurance, specifically here in San Diego, Southern California, Riverside. Of course, there's fire areas, flood areas. What are we going to do? How are we going to help our clients to get homeowners insurance? All right, so here comes Michael. All right, so take it away, Ed. What are we seeing? What's going on? What's happening in the crazy world of insurance? Hello, everybody.
Yeah.
Tell us about it.
So insurance has been going kind of haywire for the last year or so, and it doesn't seem like it's going to slow down anytime soon. We were hoping at the beginning of this year that more insurance companies would be willing to come back into the market, but it seems like it's going the exact opposite direction. State Farm just announced that they're going to drop 70,000 of their clients in California, along with 40,000 of their apartment complexes. Different carriers are putting different regulations, re-inspecting properties, just trying to find ways to get off risks, if you will. Okay. That being said, this is not a bad time to be in the market because if you can just keep your home up, there's a pride of ownership that if insurance companies see a good looking home that's well kept, they want to be on that risk. What they don't want is people to have deferred maintenance. They don't want to have issues with the home. That being said, if you're going to buy a home and there are some issues, there are some ways around it. Obviously, you can get a temporary policy. If you're working with an admitted carrier, you're not locked in to an insurance policy for a whole year. So there's always temporary solutions if you are going to buy a home, kind of fix it up and make it your own. And then you got to go and reapply with a better carrier and get you a better rate because you have more discounts. They can show proof of updates. There's a lot of things you can do to get your home approved. That being said, there's a lot of fire insurance, there's a lot of fire issues.
Do we have an area, or do we have an idea of, hey, if you're buying in this specific area right now, you might have additional insurance?
So the biggest one, Alpine or anywhere far east, Santee.
What about Temecula?
Temecula, actually, there's a lot of new builds there. Pretty easy to get insurance in Temecula. It didn't used to be that way, but it seems like the development out there, it's the newer the home, the easier it is to get insurance. Even if
why do you think that is, though?
Well, just think about it. Newer home, less issues. There's builder warranties. A lot of new. There's a lot of laws that go into effect that you have to keep it's called ordinances. So the building codes are much more strict these days. So older homes, especially the 70s and 80s, they're a lot more lax. So it's actually funny because homes built in the 40s are easier to get insured than homes in the 70s or 80s because they see more issues with those. The insurance companies aren't dumb. They see they have the data, so they see homes in this age range, they tend to have the most issues. Homes that are built in the 40s, they tend to have if they haven't had claims in the past, they're probably well built. And we're seeing this more than ever. The homes, if you're buying a home and there's been an insurance claim on it in the past,
a flood or a fire or something in the past.
Flood and fire, yeah. I mean, a lot of the time, over 90% of all home insurance claims are from water damage, not water damage. So pipe bursting, leaky roof. If you think about it, there's not fires that happen every day. We got hit by huge fires. 2 years ago.
But they're saying everything in San Diego is a fire zone now, right?
Yeah. So we kind of got hit with a perfect storm. There was, during COVID, no insurance company was allowed to take rate increases. During that time, we had 3 fires 3 years in a row. So all those companies took billions and billions of dollars worth of losses. So those carriers have to get what's called reinsurance.
Is that California or is that San Diego?
That's California specifically. So every state has their own Department of Insurance. California, they have to approve rate increases. Every state does, but it seems like California, it's been a lot more strict and they were trying to protect the consumer. But what really happened is, if insurance companies don't make money, they're not going to write policies. So
so their insurance companies are paying out more claims recently in California then they have been able to make money. So now they're like, hell no, we're out of here, or you're going to pay a lot of money. Basically.
Correct. Yeah.
Okay.
So instead of taking a 20 or 30% rate increase, the insurance companies weren't allowed to get it. So they're like, fine, screw you guys. We're out of here. And then that's causing people to take a 200 to 300% rate increase. So there was kind of a, we're kind of in the middle of a little standoff between the Department of Insurance and insurance companies battling it out. And then us as the consumer, we get to pay the price.
So we've seen, as mortgage brokers, we're doing pre-approvals, of course. You're our insurance guy. We usually pre-approve our single-family homeowners. We would say, somewhere about $100 a month for insurance. But lately, we have had clients that are in escrow. We send them to you, and now all of a sudden they have to get insurance plus the fire, what is it?
California Fair Plan.
California Fair Plan. So, which increases the price of homeowners insurance. I mean, sometimes it's almost double or more than double. Triple.
Yeah.
Which sometimes disqualifies the client from qualifying, and then they see the new payment and they don't even want to move forward with.
Or if it doesn't disqualify them, they're pissed about the total housing payment.
Right.
So.
Yeah.
So what's going on? Tell us how it works with the California. If you're in a fire zone and you need the California Fair Plan, like how does that all work?
So the Fair Plan is really supposed to be there as a temporary solution. Whenever I started insurance about 8 years ago, I think I wrote maybe 1 or 2 policies with the Fair Plan a year. Now it's like 20 to 30%, maybe even higher. It's crazy. But again, it's more of hopefully if these carriers are allowed to get rate increases, people will be able to move away from the Fair Plan. I write so many Fair Plan policies that really have no business needing it. So there's probably a light at the end of the tunnel. Maybe not. It could be within 6 months, could be 8 months, could be a year, but we're going to see more companies getting those rate increases approved. And at the same time, we can reshop those policies, get them out of the Fair Plan, and then that's going to drop their rate. So hopefully, there are some places in San Diego that are going to be with the California Fair Plan for a while. But there's a lot of areas that are like, well, this has no business whatsoever being with them. And, we'll be able to move them away in the future once more people, competition is always good. The more companies that come back, the more the risk gets spread around, the better it is for everybody.
Okay, so basically what I'm hearing from you is, of course, we have to pre-approve our clients with a little bit higher of insurance premium now, just being prepared for the fight that it might be for them to get, insurance. And then also, though, educate them that within the near future, they may be able to lower their policy once more providers come back into the state. Do you think that's kind of like the summary?
Yeah, that's exactly it. And there's no saying exactly when it's going to happen. Again, I was predicting the beginning of this year because that's what all the indications from the carriers were saying. Mm-hmm. But as the rate increases get approved, they still have to recoup the funds. So they still have every time a policy renews, they're recouping those funds. So it's going to take about a year or, however much time for them to actually make that money back, for them to say, okay, we're profitable now. Uh-huh. We're going to start opening the doors up to more and more people. And, that hopefully that's a domino effect in the right direction. We were going the really wrong direction for a long time.
Okay.
Now we're starting to trend in the right way, but it's going to take a little bit more time than expected.
Okay, and what do you suggest to people who are already homeowners, they already have their policy set up, and all of a sudden, whoops, they get a call and they're like, hey, we're exiting the market, what do we do? So what can those people do?
Yeah, well, we got a lot of those.
Mm-hmm. My sister is one of them, she'll be calling you.
Yeah,
okay.
So right now, don't get too discouraged. You might have to bite the bullet for a year or two, but again, things aren't going to be like this forever. Things will turn around. And, everything, especially like mortgage rates, mortgage rates drop, they go up. Things like that happen with insurance too. So just kind of tough it out.
Okay.
You have to get insurance. Maybe use a little bit of higher deductible for a year or two.
Okay, higher deductible. That's good. So a higher deductible will make your premium a little bit lower.
Yeah.
To start. Okay, cool.
So especially if you're going to keep your home very well, you have a nice home, a higher deductible is not a bad idea, especially these newer homes.
Okay.
The likelihood of something happening is lower. I can't say that it's not going to happen, but obviously you're weighing out your pros and cons. I would say higher deductibles are good for right now. And insurance companies are asking us to do higher deductibles so they don't get hit with these little nitpicky claims. So they're getting bled to death by these $1,000 or $2,000 claims when really people should be taking that upon themselves.
Jeez.
Because, insurance is there for the big, catastrophes.
Big stuff, yeah.
Yeah. So if you make 3 claims and they're all $1,000, one, no insurance company's going to want to take you. 2, those stay on your record for 5 years. So you want to save for something big.
Okay.
So your rates are going to go up, and it's going to cause everybody else's rates to go up. So just kind of do the best you can to keep your home, everything well kept, and just do some inspections, as often as you can.
Okay.
So.
All right, cool. I like all the information. So basically, if you guys are in the market for insurance, you know who to call. If your insurance is suddenly, you get your call from your policyholder and they're like, hey, you know what, your insurance is being canceled in your area. What do? Well, you want to reach out to Ed. He can definitely help you.
Or reach out to us and we can connect you.
Yeah, we can connect you with Ed. And then if you're just joining us, hey girl, and you're a home buyer out there in the market and you're saying, hey, I need to get homeowners insurance to get pre-approved. Of course, you're going to want to reach out to us to get pre-approved, but we'll in turn put you in contact with Ed. And here's what we're looking for when we ask our clients to get homeowners insurance. We're looking for you to get a policy that's binded and that will be due at the closing table. So a lot of people are saying, oh, hey, do we pay this right up front right now? No, you pay that at closing. So basically, if your client's out there, you're shopping, or you're going to push them towards an insurance, of course, you're going to want to contact Ed. They're going to be happy to get the quote for you. Make sure that you get that bound policy due at the closing. Anything else you want to say, Michael?
No, I think this is very educational, and we appreciate Ed's time.
Yes, and of course, call us for all your needs and drop us any questions. I'm going to go ahead and repost this so that everyone can tune back in and be educated. But if you have anyone giving any questions to you or reaching out to you about homeowners insurance, you know how to call us. You're welcome. Anything else, Ed?
No,
you're good.
it.
All right.
Signing
All right.
off.
Thanks, guys. Thanks for joining. Bye now.
Good job.
Cool.